there, savvy home buyers and sellers. This is Jeff O'Leary, the Village Guru, and welcome to the March 2021 Greater Toronto Real Estate Market Update. In this episode, we're going to go over what's been going on in the GTA over the past month, what we might expect to see into the spring and into the summer, and finally, we're going to touch on, is there a glimmer of hope for condo owners? You're not going to want to miss this episode, so let's go! Well, here we are in March 2021, and sales have continued at a blistering pace. When we look at the amount of sales in the GTA for all property types and compare it from February 2021 versus February 2020, we can see year over year sales have increased roughly 52% from the same time last year. Now, when we look at price appreciation for all property types in the GTA, home prices are up approximately 14% compared to the same time last year. Now, when we look at the single family freehold segment, so detached houses, semi-detached houses, and row houses, they're up well over 20%, which is reflecting the sentiment that buyers are favoring freehold properties, low-rise properties, less dense properties. And I think this is the trend we've been seeing over the past 6-7 months with a lot of movement out into the 905 suburbs and even in the city itself, where people try to take advantage and get that detached house. Now, before we get into the numbers, let's go over what's going on in the news. First off, let's talk about interest rates. Have they bottomed out? Reports are coming out that interest rates are slowly starting to inch higher, and this is being reflected in the spike in long-term bond rates. Now, going forward, is this reflecting a new trend of rising interest rates? Well, the jury's out on that because we still are in an economy that's kind of a little weak due to COVID, and there is still a lot of stimulus being pumped into the economy, money being printed both in Canada and the United States, and I personally don't see a huge appetite for raising interest rates that much. I believe that the Bank of Canada is still targeting probably 2022 to 2023 to actually start actively trying to push interest rates up in order to control inflation. However, when we look at interest rates, it's definitely worth keeping an eye on. And if you are looking to buy in the near future, I'd recommend you lock in your rate because chances are we probably have seen the bottom of how low they're going to go. Next, let's talk about the economy. Surprisingly enough, the economy actually has been doing better than analysts expected for the first part of 2021. In fact, it's doing much better than expected that the Bank of Canada is now having to balance the pressures of keeping interest rates low versus what's going to happen in the economy. If you read this article published in the Globe and Mail, it clearly states right here that over the past few weeks, Canadian economic data have come in stronger than the bank forecast in its January monetary policy report. Gross domestic product in the fourth quarter of 2020 grew at 9.6% on an annualized basis, twice what the January report had projected. So while this is good news, it can also have possibly an effect on interest rates. We'll keep monitoring this and hopefully the economy continues to get better at a steady pace. Now next, let's talk about the big elephant in the room. Recently, the Bank of Canada started dropping little hints that the housing market may be heating up a little too fast. Now, if we take this article in BNN, right on the first line, it says Bank of Canada Governor Tiff Macklem says the central bank is seeing early signs that people may be purchasing homes solely because they believe prices may go up. Now, when I look at it, this really isn't no surprise. Realistically, a market cannot continue to basically double in price every 3 years. That's gonna basically price everybody out of the market. However, in the 2021, all the signs are still pointing to a very strong real estate market, and we're seeing a lot of multiple offers and a lot of price growth, especially in freehold, detached, semi-detached, and townhouse segments. Obviously, the condo market has not kept pace with it. However, we will get to that because that may come up in the future. Now, one more thing I want to say about this. If you can all remember what happened back in 2016 and 17, the last time we had a super red hot market where prices were like basically skyrocketing, the Bank of Canada and the government started to slowly announce that, hey guys, this market's overheating. And generally, in my experience of being through a couple of market cycles, when our market starts to overheat, it's not like they figure that out and then the next day they change the rules. Generally, you're looking at probably a 3 to 4 month warning window, that if this continues, that there might be some type of regulatory change that's going to happen in order to maybe cool down the market a bit. Now, I don't think that they're going to use the tool of jacking up interest rates in order to cool down the real estate market, because I think that'll have a negative effect on way more other things in our economy. So if the government decides to act on this and maybe cool down the market in the GTA, I would guess that it might be to do something with regulations, say the qualifying rate for first-time home buyers to get mortgages, things like that. So the government always does have tools at their disposal where they can tweak the market in order to slow it down a bit. Now, the most important thing for you to know as a consumer is I don't believe that the government's going to crash the market. I think real estate is the best performing segment of our economy, and they'd be crazy to do so. However, a slowdown in the real estate market could cause a short-term shock, which will cause people to freeze. And that's exactly what happened in 2017. When the foreign buyers tax was brought in, we saw sales plummet for a few months. So again, if you're looking to sell in the spring, I suggest that you get going on it, because as the spring goes on, if prices continue to go up at the rate that they've been going up over the past year, you may see some government action going on. And it sucks. You list your house thinking you're going to get one price, and then the market all of a sudden slows down. It's not a good position to be in. So keep an eye on the news. I'll keep reporting on this. If we see more reports that the Bank of Canada is getting more worried about our housing market, it's really going to be something to keep an eye on. All right, so now let's get down to the numbers of what's been going on in the GTA over the past month. So here we are looking at the TREB Market Watch report for February 2020. And as you can see, almost all home segments, with the exception of condos in Toronto, have all posted year-over-year increases in prices. Comparing the 416 to the 905, obviously the big winner is still the 905, where detached, semi-detached, and townhouses are all up well over 20% year over year. When we look at the city of Toronto, it's still good, but a little more modest, where you have detached houses up 13%, semi-detached up over 9%, and townhouses up over 7%. Again, this reflects the fact that houses are generally way more expensive in the city of Toronto to begin with, and that a lot of the price growth has occurred in the 905 due to people being able to leave, work remotely, so therefore looking for larger houses or better bang for their buck. Now, when we look at condo apartments, it's interesting to note that in the 905, prices have actually gone up over 5%, while in Toronto itself, condo prices have gone down over 6% year over year. And one thing I want to point out as an agent who works mostly in the suburbs, we get our news from Toronto. So everything that happens in downtown Toronto is always about downtown Toronto. So what ends up happening is it trickles out into the 905 areas, Mississauga, Oakville. I'll get buyers saying, well, prices of condos have gone down. And the reality is they have not. In fact, prices even in Toronto haven't necessarily always gone down. It's just certain areas. The downtown core is the hardest hit, just because they have the most condos, the most investors, and that was the area that took the biggest hit with coronavirus. However, there are some signs of life in that market, and that's what I want to talk about next. All right, so now the big news for the month. Is the downtown Toronto real estate condo market making a comeback? You just look at the face value of the stats, it's still reporting pretty crappy news. Like, yeah, condos are down over 6% while houses are up 20%. I mean, that really doesn't look good. However, we have to look at underlying market factors. Because remember, if you're an investor or you're a buyer and you're looking in order to maximize your return, you need to buy things when they're low with a good chance that they're actually going to go up. So in order to understand that, I actually crunched the numbers for downtown Toronto, the MLS district CO1, which has the most condos in the city, to see what's actually going on. And when I look at numbers of a market, when I'm trying to look at what I think might happen in the next 3, 4, 5 months, I'm not so concerned with average price growth, but with inventory, because the amount of inventory versus the amount of sales is the true indicator of where our market's going. So when we look at this chart I've tracked since September 2019 all the way to February of this year, we can see that the blue lines represent the amount of condos for sale, and the orange line below represents the amounts of sales that month. And as you can see, pre-coronavirus, we had a pretty tight market where there was a few more listings versus the amount of sales, but all in all, the market was quite tight, there wasn't a lot of inventory, and it represented a seller's market. Once we got into April, you could see the amount of sales dropping in Toronto, but at the same time, the amount of condo listings skyrocketing. And this is what started to lead to the decrease in prices. Now, as we go through the year, the worst months for inventory were in August, September, and October of 2020. That's when there was 4 to 5 times as many condos for sale as sales happening. That reflected a true buyer's market, which caused our prices to go down. However, since November, you've seen the amount of inventory of condos available sharply dropping. We're into February 2021, and the amount of sales outpaced the amount of new listings of condos in downtown Toronto for the month. Now, if I look at this as a trend, I can definitely see that inventory is tightening and the amount of sales are rising. So when I look at a chart like this, it's telling me that if this continues, we're going to be in a seller's market for condos and you're going to see prices start to increase. Because at the end of the day, price appreciation is really only affected by one thing: supply and demand. If you have more units available than people who want to buy them, eventually the prices are going to go down. If you have more people who want to buy versus not enough units in order to buy, then there's a scarcity and prices will go up. So while we look at the chart and see that, yes, the prices are down, we can see supply tightening, investors getting back in the market, and the number of sales of condos are sharply increasing. So this is definitely something to keep an eye on, but I think it's a sliver of hope, kind of like the prize fighter who maybe got almost knocked down in the 5th round, but like in the Rocky movies, the condo market's starting to come back. At least that's my prediction. Well, there you have it. I hope you enjoyed my March 2021 real estate market update. If you like this video, make sure to give it a thumbs up, subscribe to my channel, and share it with your friends. I'm Jeff O'Leary, the Village Guru. If you have any questions about real estate, always feel free to call or email me. Have yourself a safe day.